Welcome back. Family Dollar Stores, the national discount chain, raised its 2009 forecast today, saying that apparel and home products improved in the third quarter.
So does this bode as a good sign for the same-store sales numbers out tomorrow? Well, David Abella is portfolio manager at Rochdale Investments. He joins us now with his outlook. David, good morning. I want to start with Family Dollar, because they definitely are on the move today. They're surging after raising their forecast for the current fiscal year. They continue to be a winner in this economic downturn. Is it not surprising to see them kind of put out better and better numbers?
Yes, in this environment, it's not surprising, although the stock has done really well. A little late to get into the stock at this point. I think there was some concern earlier that can they compete against a Walmart? They're a smaller Walmart format, basically, but they've showed that you can compete against Walmart doing a smaller format in areas where Walmart's not.
Let me just follow with, is it a case of Family Dollar doing the right thing or just being the right retailer at the right time?
A little bit of both. They're definitely doing the right thing, but they are the right retailer at the right time. And again, the concern with Walmart, they've shown that they've been able to carve out a good niche in a very similar category.
And if I'm not mistaken, what we're seeing people from every income level go to Family Dollar. That wasn't always the case, was it?
That wasn't always the case. You actually find that at Walmart as well.
Yeah.
And that could be something, as much as Family Dollar store has run up in stock price. The valuation, 13 times roughly, still makes sense. And if this is a long-term trend, 3 to 5 years and onward, it would still make sense to get into Family Dollar even now.
Well, that's a great question. I think everybody wonders with these guys like a Family Dollar, when things start to turn around, will those customers still stay with Family Dollar or say, you know what, it's not so bad, I can go elsewhere?
Yeah, that's a great question. I read a lot of research, put it all together to make an investment decision, and a lot of sources out there are saying time to get out of the Family Dollar stores and Walmarts and into the more discretionary retailers.
Now?
Now, to get in a little early. I'm more cautious. I would still be very defensive. I would stick with names like Family Dollar and Walmart and not necessarily sell those into the Best Buys yet.
Can I ask why?
Because I think that the unemployment possibly getting to 10%, that'll be a headline number that will scare people. Consumer confidence will drip back down. I'd like to see how back-to-school sales do, see exactly what happens with the consumer. There could be a long-term trend where people just, rich and poor, shop at Walmarts and Family Dollar.
And speaking of that back-to-school season, it always comes up sooner than most parents would like. That's just around the corner for a lot of people since we're in July. What are the prospects for the back-to-school season?
It's a real big unknown. A lot of retailers are going in with low inventory, which is good. They want to avoid markdowns. There's some thought that the inventories are too low and that people might run out. There might not be items that the consumer wants.
So pleasantly surprised, and then they'll restock their inventories?
If they can do it in time, otherwise it could mean a matter of lost sales. But I think most retailers really don't know how the back to school is going to be, and it's going to be a real big key in where the consumer goes going forward, including the holiday season.
I mean, the consumer's still in a funk, safe to say. I mean, if you look at job losses, if you look at, data out in terms of consumers spending, not spending more, forgive me, but saving more rather than spending, I mean, it's pretty dicey here.
It's pretty dicey, and when you read, say, local, like papers or online in other states, you really get the sense that the fastest growing same-store sales are the thrift stores, really.
Right.
So I think there's some optimism in New York that the economy is going to turn around quicker. I'm a little, again, more defensive, like to wait and see a little bit more.
What are you seeing in the malls?
Well, the malls is a tough area. I was at a conference a month ago of REITs, Real Estate Investment Trusts. The largest mall operator, Simon Property Group, basically said there probably wouldn't be any growth in malls, for as long as 5 years.
Wow. That's pretty bearish.
That was definitely very bearish. And probably a good sign for malls in general, because from the REIT point of view, they're overstored and over-levered a little bit. But from the retailers that deal in the malls, that was not a positive view.
You didn't get any sign from these retailers that, well, maybe we're seeing things start to turn around? Everybody keeps talking about a bottom. Maybe we're getting close to the bottom. Are they bearish as well?
I think retailers and the retail-oriented REITs are still very cautious. I think the turnaround might be in other areas of the economy, but they're kind of on the front line, and they're not just seeing it yet. I think from the mall point of view, though, there's definitely going to be winners and losers. Retailers that could expand within malls of other retailers that are going out of business. They could pick up leases at rates that they haven't seen in a few years. That could be a positive, a way to expand. A name like The Buckle,
right,
which is growing same-store sales and is expanding. They're moving to their first location in New Jersey. This is a chance to move into malls that somebody else vacated.
David Abella of Rochdale joining us on set. David, thanks.